June 2021, Mesa, Arizona. The desert heat is relentless, the kind that bakes the asphalt and blurs the horizon. Inside a local bank branch, the air conditioning hums quietly. Customers wait in line, tellers process transactions, and the branch manager, a 35-year-old woman named Brooke McDonough, walks past the vault. She's done this 1,000 times. She will do it again tomorrow. And nobody suspects a thing. What they don't know, what nobody in that building knows, is that Brooke McDonough has already begun one of the most methodical, calculating financial crimes in Mesa's history. And the weapon she's chosen is the one thing everyone in that building trusts her with completely: the keys. To understand what Brooke McDonough did, you have to understand what she was. Branch manager. Not a teller, not a loan officer, the manager. She was the authority in that building. She oversaw operations, she controlled access to the ATM machines and the vault. She was, by definition, the person the entire system trusted most. And in banking, trust is everything. The Federal Deposit Insurance Corporation protects billions of dollars in American savings. The entire financial system rests on the assumption that the people entrusted with those funds are exactly who they say they are. A branch manager is supposed to be the last line of defense against fraud. Brooke McDonough was the fraud. She took the job in 2020 in the middle of a pandemic when the world was distracted and oversight was stretched thin. For over a year, she managed her branch without incident, or so it appeared. But starting in June 2021, something changed. It started with the ATMs. Branch managers have access to ATM machines and vault cash in ways ordinary employees don't. They replenish the machines, they reconcile the totals, they sign off on the numbers. It's a position designed for efficiency. Brooke understood something most people never think about. In a busy branch, small discrepancies get absorbed into the noise. A few $100s here, a few hundred there, the machine gets replenished, the ledger gets balanced, everyone moves on. She began stealing cash directly from the ATM machines and the branch vault, not recklessly, not impulsively, carefully, deliberately, systematically. And then she did something even more calculated. She drove to other bank branches, different locations, different machines, and deposited the stolen cash into her own personal accounts. Not in one large sum, never that. Instead, she broke every deposit into smaller amounts, carefully keeping each one under $10,000. Because she knew the number. Federal law requires banks to file a currency transaction report for any cash deposit over $10,000. It's an anti-money laundering safeguard, a tripwire built into the system. Brooke McDonough had spent years working inside that system. She knew exactly where the tripwire was, and she stepped over it every single time. This is where the story becomes something more than ordinary theft. What Brooke was doing had a name: structuring. It's a deliberate act of breaking large financial transactions into smaller ones, specifically to avoid triggering government reporting requirements. It's not just illegal, it's a federal crime, a crime that signals premeditation, a crime that says, I know the rules and I'm using them against you. Over 8 months, June 2021 to February 2022, she stole $655,000. Not in a single heist, not in one desperate moment of greed, in dozens of careful, calculated trips, different ATMs, different branches, different amounts, all just under the wire. She deposited or spent approximately $645,000 of that cash during the same period. The money moved almost as fast as it was stolen. It didn't sit in a mattress. It flowed into accounts, into spending, into a life that the salary of a branch manager could never fully explain. Institutions rarely collapse all at once. They fail one ignored warning at a time. But this time, the warnings weren't being ignored. They were being manufactured. Here is the brutal irony of what Brooke McDonough built. The very system she exploited, the banking infrastructure, the transaction reporting network, the federal oversight apparatus, was also watching her. The FDIC Office of Inspector General exists for exactly this moment. Its investigators are trained to find the patterns that criminals try to hide inside normal financial behavior. And patterns, no matter how carefully disguised, leave traces across multiple branches, across dozens of transactions, across 8 months of carefully structured deposits. The picture was becoming visible. Mesa Police Department joined the investigation. Federal prosecutors in the District of Arizona began building a case. Assistant U.S. attorneys Aaron Ketchel and Adriana Genko started laying it out piece by piece, transaction by transaction. What they had was devastating in its detail. Not a theory, not a suspicion. A paper trail that Brooke McDonough had unknowingly been building herself, with every deposit, every trip to a different ATM, every carefully calculated amount just beneath $10,000. She thought she was erasing the evidence. She was creating it. December 11th, 2025, Phoenix, Arizona. The jury had deliberated. The evidence had been weighed. The transactions had been counted, cataloged, and laid bare before 12 ordinary people who now understood exactly what had happened inside that Mesa branch. The verdict came back on all 12 counts. Guilty. 1 count of embezzlement by bank employee, 6 counts of transactional money laundering, 5 counts of structuring transactions to evade reporting requirements. 12 counts, not 1 acquittal, not 1 reasonable doubt. The woman who had spent 2 years methodically dismantling the trust placed in her sat in a federal courtroom and heard the word that no amount of careful planning could prevent. Guilty, guilty, guilty. U.S. Attorney Timothy Corshane spoke plainly afterward. Significant trust is placed in business leaders in our community. When those individuals take advantage of their leadership position to embezzle large amounts of money from the business they were entrusted to lead, our office will hold them accountable. FDIC, Special Agent in Charge. Ryan Corner put it even more directly. The verdict, he said, should serve as a warning to anyone considering stealing from federally insured institutions to line their own pockets. The most dangerous mistakes are usually the ordinary ones. The ones made not in moments of crisis or chaos, but in quiet, calculated moments when someone decides that the rules exist for everyone else. Brooke McDonough had $655,000. She had a plan. She had keys to the vault and knowledge of the system and 8 months of what she believed was perfect execution. What she didn't have, what she never had, was a way out.